Welcome students. In this video we are making an attempt to learn computation of taxable income and tax liability with respect to individual assessees. And our discussions mainly will be considered for syllabus purpose and for the university exam related content. This is the format for calculating total income and tax liability of an individual assessee. We are mainly concerned with assessment of an individual. As we have already understood, there are 5 heads of incomes. 2 heads we have learned in the 5th semester BCom level, and the remaining 3 heads we have learned during this semester. So we have to take income from salary, income from house property, taxable income from business and profession, taxable income from capital gains. But while taking capital gains, we have to exclude long-term capital gains and short-term capital gains where STT is attracted. So except these two, STCG with STT and LTCG. Except these two, any other capital gains we have to add. And then finally, taxable income from other sources. Even here, we have to exclude casual income. Casual income is nothing but winning from lotteries, card games, TV show games, horse races, betting, gambling. All this comes under casual income. So except these, we have to add all 5 heads of incomes, and which is called as gross total income. From this gross total income, we have to give deductions under section 80C to 80U. Then we will arrive at the total taxable income. But this will be excluding the 3 which we have excluded in previously. Now we have to add it back. Casual income, long-term capital gain, short-term capital gain with STT, and any other deemed incomes if it is there, all that we have to add it back to the income to arrive at the total taxable income, or which is also called as net income. But we have to remember these, why the 3 points or 3 items is excluded in gross total income. The reason is all these 3 items attracts a flat rate of tax. There is 2 types of taxes. One is flat rate and another one is slab rate. Flat rate means whatever the income you get under the flat rate system, it will be charged at a flat rate of 10%, 20% or 30%, whatever is fixed. Whereas under slab rate, which applies to individual income, individual assessees, like up to 2.5 lakhs there is no tax, 2.5 lakhs to 5 lakhs there is 5%, 5 to 10 lakhs 20%, 10 lakhs and above 30%. This is called as slab rate. That is the difference between the slab rate and the flat rate. So after applying this format, we will arrive at the total taxable income. And then let's look at the format for calculating tax liability. As I explained you earlier, these 3 items, casual income, LTCG, STCG with STT, will attract a flat rate. That's why casual income is at 30%, it is taxable. LTCG is taxable at 20% and STCG with STT is taxable at 15%. There is one more, deemed incomes. Like if there are any unexplained expenditures or cash credit or investments or money where you are not able to explain the source, such items is also taxable at a flat rate of 30%. And after all these, finally whatever is the left out income, and that income is taxable under slab rates. That's why it is given in the bracket. You can identify the difference between the slab rate and the flat rate. Now the total of all these 5 put together is your total tax. If your total income is is less than 3,550,000 per annum, then you are eligible to claim a rebate under Section 87A for rupees 2,500 or 100% of your total tax liability, whichever is less. After subtracting the rebate, if you are eligible, whatever the total tax we get, to that total tax we have to add surcharge if it is applicable. Surcharge of 10% of income tax where the total income exceeds 50 lakhs per annum. If the income exceeds 1 crore, then the surcharge will be charged at 15%, 15%. So that we have to add. Health and education cess at 3% we have to add. So now we get the total tax. From this total tax, if you have paid any advance taxes or tax deducted at source, that has to be subtracted. If you are supposed to pay any interest or penalty for your delayed payment or any other legal proceedings against the assessee, such interest and penalty has to be added. And finally, we will arrive at the tax payable. Sometimes this tax payable or tax liability, what we normally call, it can be even a negative value, which means that refund that you have to receive from the tax authority. It is not always the tax is payable by the assessee. Even whenever you have paid excess tax in the form of tax deducted at source. So for example, you have banking investments or you have interest from bank where the bank would have already deducted the TDS at the source itself. So all such TDS, if you are not coming in the tax bracket, you can claim that refund back from the tax authority. So that is the reason why everybody, even if I'm not supposed to pay tax, but still it is good to apply or file income tax returns. That is the best practice. So it can be tax payable by the assessee to the tax authority, or if it is a negative value, which means that this is the tax refund which has to be paid by the tax authority to the individuals. This is how the format will be followed. Please understand it properly. I was mentioning about the flat rate of tax and slab rate of tax. Now you look at the slab rate of tax for different individuals based on their age. It is based on the different types of persons. Individuals, HUF, association of persons or body of individuals, and artificial persons. These are the slab rates which will be applicable. If your net income is ranging between up to 2.5 lakhs, there is no tax. 2.5 lakhs to 5 lakhs, 5%. 5 to 10 lakhs, 20%. 10 lakhs and above, it is 30%. Same way, for the senior citizens, those who are above the age of 60 years but less than 80 years of age, for them up to 3 lakhs there is no tax. 3 lakh to 5 lakh means the 2 lakhs difference amount, 5% they have to pay. How we calculate normally? 3 to 5 lakhs means 2 lakhs. 5% of 2 lakhs we have to take. Then 5 lakhs to 10 lakhs, 20%, 10 and above it is 30%. There is a third category of citizens who are called as super senior citizens whose age is above 80 years. So for them, up to 5 lakhs there is no tax. 5 to 10 lakhs, 20%, 10 and above it is 30%. I was mentioning about 87A rebate. Any resident individual whose income is up to 3,50,000 per annum can avail this rebate. It is a deduction from the income tax before calculating the education cess, higher education cess. and the amount of rebate is 100% of the income tax that we have to pay, or rupees 2,500, whichever is less. And surcharge is nothing but, it is also called as tax on tax. 10% of your income tax if your total income exceeds 50 lakhs. 15% of your total tax if your income exceeds 1 crore. And health and education cess is at 4%. These are the basic concepts, information which you people should be aware before calculating the problems. Look at this question. Mr. Sumant, a resident, furnishes the following information, and we are supposed to find out what is his total taxable income or net income. He is giving us business income, long-term capital gains, short-term capital gains not covered by the section 111A. Not covered by under section 111A means there is no security transaction tax. That means this STCG can be added to gross total income. Suppose if it is reverse, like in the bracket if they give covered under section 111A, which means that this has to be excluded while adding gross total income, and we have to charge 15% flat rate on this amount. But here it is not covered under section 111A, so that means it is included in gross total income. No flat rate will be applied. Then he has some interest on debentures, income from other sources. It will be payment to medical insurance premium on own life will come under 80D deductions. Donations are given. Donations comes under 80G. So we are going to learn 80G and 80D in this question. Another important thing while reading the question you should give donations. You should remember there are 3 categories of donations. Group A 100% deductible, Group B 50% deductible, and Group C with limit. With limit under Group C, again we have 2 categories, 100% and 50%. So while reading the points, please make note of it. Donations to National Trust for Welfare of Persons with Autism will come under Group A 100%. Fund set up by Gujarat government is for 100% Group A. Donation to Rajiv Gandhi Foundation and Prime Minister's Drought Relief Fund is for Group B 50%. And approved public charitable institutions will be eligible for Group C, that is with limit. So whenever you classify these points, be little careful while calculating adjusted taxable income. Now let us solve this question. His total income is adding up of business income 83,000, STCG which is not covered under 111A will be added to gross total income, so 20,000. Other short-term capital gains 10,000, interest on debentures 9,000. So total gross total income comes to 1,22,000. Out of this gross total income, we have to give deductions under 80D, medical insurance premium. On his own life, he is eligible for 3,000. He has paid premium of 3,000 and he is eligible for a maximum limit of 30,000. That is 25,000 plus 5,000, 30,000. So whichever is less, 3,000 is less. So entire 3,000 he can subtract. Under 80G or in the working notes, it's clearly given. Just pay your attention here. Under note 1 working notes, gross qualifying amount, net qualifying amount is given, rate of deduction and amount of deduction. National Trust for Welfare of Persons with Autism is 100% deductible. So your gross qualifying amount is 4,000, that becomes your net, and amount of deduction is 4,000. Donation to Gujarat government, fund set up by the Gujarat government is 100% deductible. So entire 3,000. Donation to Rajiv Gandhi Foundation is 50% and you have gross qualifying amount is 1,000. Out of that 1,000, only 50% means 500 is deductible. Donation to Prime Minister's Drought Relief Fund, 5,000, out of which 50% is only eligible, so 2,500. And the last fifth one, donation to approved public charitable institutions. This will come under Group C with limit. That means you have to calculate adjusted gross total income. 10% of adjusted gross total income or your net qualifying amount 11,000, whichever is less, that we have to tick. Here, to calculate adjusted gross total income, the formula is given. The actual gross total income is 1,22,000, out of which we have to give deductions under section C to section U. Or if you have any LTCG, that you have to subtract. If you have casual incomes, that has to be subtracted. So after subtracting all that, the gross total income, adjusted gross total income stands at 1,19,000. So 10% of 1,19,000 is 11,900 or rupees 11,000, whichever is less. So obviously less amount is 11,000. So that becomes your net qualifying amount. So out of this net qualifying amount 11,000, you are eligible for 50%. So 50% of 11,000, 5,500 you are eligible. Now you sum it up, all the 5 donations under 80G. Total it comes to 15,500. This 15,500 we have to show in the first format to calculate the taxable income under 80G. So now you subtract 15,500, 3,000 under 80D out of your gross total income. So your net total income comes to 1,03,500. There are long-term capital gains which we have not added in the gross. So now we will add it back. Net LTCG 4,10,000. So your total income is 5,13,500. Hope you have understood 80G. Pay a little more attention in learning this. Let us understand how to calculate adjusted gross total income for donations which comes under the C group with limit category. We have the gross total income of 5 heads of incomes. From this we have to subtract casual income, long-term capital gains and short-term capital gains with STT, and also deduct all the deductions from 80C to 80U except 80G and 80GG if you have in the question. Except these two, all other deductions has to be calculated, and finally we arrive at the adjusted GTI. The amount to be deducted under C group under 80G deductions, we have to take 10% of adjusted GTI or the actual amount of donation, whichever is less. From this less amount, first we have to deduct 100% eligible donations, and remaining on the balance, 50% of this balance will be claimed as deductions. So total, it's put together 100% eligible donation plus 50% of the balance. The total amount is nothing but the donation which has to be considered for C group. And when we calculate 80G deductions in total, that is total of A, B, C, 3 groups put together, then the total amount only is considered in the final format. To make you more conversant with 80G donations, I have shown you here the calculation of adjusted gross total income for Group C donations. Out of gross total income, you subtract casual income, LTCG and STCG with STT. Then deductions from ATC to ATU except ATG. Then whatever amount you get is called as adjusted gross total income. Out of this adjusted gross total income, you have to take 10% of adjusted gross total income or the actual amount of donation, whichever is less. Out of this less amount, first you will subtract 100% eligible donations and then 50% eligible donations. Total put together 100 plus 50%, whatever the amount you get, is eligible for ATG donations under Group C. This is how we have to calculate Group C donations under ATG. Look at this question. Mr. Keshav furnishes the following income and expenditure relevant for the previous year, and we are supposed to calculate what is his total income. They have straight away given the business income, winning from lottery, donation to Prime Minister's National Relief Fund will be eligible for 100% deduction, donation to Government of India for promotion of family planning will come under ATG Group C with limit 100%. Donation to Public Charitable Institute will come under ATG Group C 50% deductions. Let us solve this. Look at the answer. His business income is 95,500 and we have to add if there is any other income. It is clearly given only winning from lottery. Winning from lottery is nothing but casual income. So casual income we will not add it to gross. We will add at the end after giving the deductions. So your gross total income stands at 95,500. Out of this, deductions under ATG we have to calculate. Look at the working note 1. Prime Minister's National Relief Fund is eligible for 100% deductions. So 100% of 11,000 will be the qualifying amount. Donation to family planning will come under ATG C group donations 100%. And public charitable institutes will come under Group C 50% deductions. So there are two donations which will be eligible under Group C. Whenever we have Group C, you have to remember we have to calculate 10% of adjusted GTI. So to calculate adjusted GTI, we have to take gross total income minus deductions under section ATC to ATU plus casual income. So 95,500, we don't have any other deductions other than ATG, and we have to add casual income 4,500. Total it comes to 1 lakh. So 10% of 1 lakh, that is 10,000, or the actual amount that you have donated. You have donated 3,000 towards family planning. Look at the gross qualifying amount column. Family planning 3,000 and public charitable institution 12,000. So total it is 15,000. So 10% of 1 lakh, that is 10,000, or 15,000, whichever is less. So 10,000 is less. Out of this 10,000, first you have to subtract 100% eligible. 100% eligible is 3,000, that is family planning. So 100% you give, and in the amount of deduction column you can see 100% of 3,000 straight away we have taken. So out of 10,000 you have already subtracted 3,000. Out of 10,000, 3,000 towards family planning we have given the deductions. So how much is balancing? 7,000 is left. So this 7,000 will be shown under net qualifying amount column. Out of this 7,000, 50% only is eligible. So 50% of 7,000 is 3,500. Look at the last column, amount of deduction. So now by adding up all the three, total it comes to 17,500. This 17,500 we have to show in the first format, deduction under ATG. So now your total income becomes 78,000 plus if there are any casual incomes, LTCG, we have to add it back. So 4,500 winning from lottery is a casual, So that has to be added and your total taxable income will be 82,500. Hope you have understood this ATG deduction donations.